Risk markets are generally firm in Asia today as supported by last week's QE3 boost. Some consolidations might happen today, but markets will likely stay in an overall risk-seeking mode. This week, 9 Fed presidents will make public speeches and we will get a better understanding of their thinking on their monetary stance and the economic outlook. In the currency markets, European majors are trading close to last week's high for the moment, but some retreats have been seen in commodity currencies. Indeed, Aussie is underperforming even the Kiwi and Canadian dollar. And we expect Euro and Sterling to outperform Aussie and Canadian. Regarding the European Central Bank's outright monetary transaction, the Institute of International Finance warned that the conditionality could appear as an obstacle to some countries in need, deterring them from requesting support. Also, the IIF warned that termination of bond purchases if a country is perceived to be not in compliance would likely result in a cliff effect and an abrupt market correction. Separately, they noted that further delay in reviewing and approving Greece's bailout would be a major event risk and would add to the strains on the Greek economy. In Spain, the economy minister said that the over €100 billion of austerity measures the country introduced would be sufficient in meeting the budget deficit target, and the measures are already significant and ambitious enough. German Finance Minister Schäuble acknowledged that Spain, very convincingly, laid out it's on track with its budget and Spain will fulfill its commitments. Though, he warned that if worsening economic developments lead to additional problems, Spain would have to take additional measures. EU Economic and Monetary Commissioner Rehn also acknowledged that Minister de Guindos today expressed very clearly that Spain is ready to take the necessary action to meet the fiscal targets. In Australia, the Reserve Bank of Australia's documents revealed that there are as many as 23 global central banks which are holding the currency as part of its reserves. The documents also noted that the apparent preference shift and resulting portfolio shift of foreign investors towards Australian dollar government securities has increased Australian dollar demand. And, such increase in demand associated with this shift appears large by historical standards. Also, non-resident purchase of bonds supported the Australian dollar in recent times, probably associated with a reappraisal of the relative risks of such investments. Meanwhile, we'd like to point out that the recent shift in risk sentiments could also trigger some reverse flows that would limit Aussie's strength compared to other major currencies, in particular the euro and sterling. The latest CFTC data showed that euro net shorts decreased again to 93,700 contracts on September 11th, compared to 102,300 contracts a week ago. Sterling positions remained relatively neutral with minus 4,400 net shorts. Yen longs rose slightly from 24,000 to 32,800 contracts. Swiss franc shorts dropped to 9,000 contracts. Canadian dollar net longs jumped impressively from 66,600 to 101,900 contracts, making a new 2012 high. Australian longs rose slightly back from 62,400 to 68,200. On the data front, New Zealand Westpac consumer sentiment improved to 102.5 in Q3. UK Rightmove house prices dropped 0.6% month-on-month in September. Eurozone current account trade balance will be released in the European session today. Canadian International Securities Transactions and US Empire State Manufacturing Index will be featured in the US session.